Okay, good morning, everyone. Let's dive straight into your next conversation. I also wanted to say thanks to Sarah for that wonderful introduction, and thank you all for sticking around. What we know is that above average investment returns are often expected and embraced by the hedge fund or the hedge fund industry, but how do they make this happen? So over the next few minutes, we're going to unpack this with our expert panel. Very pleased to say that Aaron Landier is here. He's the CEO of Bevan Howard. It's a leading global alternative investment management firm specializing, of course, in macro trading strategies. Lita Braga also joining us, the CEO and co-founder of Systematica Investments, which focuses on systematic trading strategies. And Bill Stone is the chairman and CEO of SS&C Technologies, a global provider of investment software and services. So let's dive straight into this. And first of all, focusing in with Aaron and Leda, let's talk about focus and approach here. So how do each of your firms, this is Bevan Howard as a discretionary manager, Systematica as a quantitative manager, keep a long-term focus in a world that really loves short-term trades? Leda, do you want to kick us off?
Yeah, certainly. For us, as a systematic firm, as a systematic manager, articulating the process is necessary. In the discretionary world, the discretionary trader has a process often in their minds and are not necessarily forced to articulate it externally. For us in the systematic world, of course, by coding and by setting out our algorithms, the process focus is somewhat natural. And also the use of technology, which kind of promotes the process view. And it's important in an industry that has become predominantly institutional, right? Our investors have gone, I started in the industry in 2001. There was a good number of high net worth individuals, there were clients of ours then. Nowadays, it's all institutions. So the horizon is 10 years plus, so the process is super important.
Aaron, on focus and approach, walk me through it.
Sure. So I think the first thing to say is that, like Leda, we have been delivering long-term returns for investors for 20 years, and that superior return stream has been something which has driven the business and been the source of incredible net returns to a broad range of investors. So short-term returns, of course, are important, but we all know that long-term returns are what all LPs are looking for, and every long-term return, by definition, is a combination of a bunch of short-term returns. The power of Bevan Howard is that the portfolios are managed by an expert team of portfolio managers. Some of those individuals are focused on a specific strategy which has a short-term horizon, some on a long-term horizon, and it's the teamwork and the power of the collection of those individuals that really drives the returns which, as I mentioned, over time have delivered superior returns over more than 2 decades. Then, of course, we also have complementary strategies. We have the largest liquid crypto fund in the world, and that's an asset class which, as we all know, is extremely volatile, so investors in that product definitely need to have a longer-term perspective. So partly it's about an appropriate perspective for the product set, and partly it's about making sure that the individuals managing the money in combination are able, through the short-term returns, to deliver the powerful long-term returns that we're all looking for.
And Bill, come on into the conversation here as well. Walk us through how SS&C uses technology and investments to help institutional investors focus on the long term.
Yeah, I think we take a little bit of a different perspective. Obviously, we're not investors like Lita and Errol here. We really look at how do we make sure that our customers, our clients, can operate where they want to operate. And the rules are different around the world. There's different regulators, obviously, there's different currencies, there's different taxing regimes, and the more you can give your clients the information that they need when they need it, and they have to be confident that it's right. And they're doing a lot of things. Some of our clients can trade 5 or 10 million trades in a day. So you have to be able to process that, deliver it back to those portfolio managers and traders. And we all know how laid back they are when you don't get it to them on time. So we think that focus on details. This is a minutia business. You have really some of the stars that make the selections, but they have to have the support in order to be able to make the selections again and again and again.
So let's talk about selections again and again and again. I just wanted to take a deep dive into the investment strategy here just quickly. Of course, we're going to talk about the importance of location because we're here in Abu Dhabi and that's important as well. But let's talk about how to make money in this environment because with regards to hedge funds, what we've seen is these funds being able to deliver consistent returns in some cases, even in equity bear markets like what we saw in 2022. So what are some of the current trends in allocation or risk management being utilized to actually deliver returns now? Where is it possible to make money as a hedge fund in this environment? Lita, can you walk us through your strategy?
Yeah, we take the quantitative approach, but within that quantitative approach, we run a number of different styles. I think so we run equity market neutral, we run macro trend following, we run macro non-trend, and we run multi-strat vehicles as well. I think that what investors are really looking for these days, particularly institutional investors, is low correlation to traditional asset classes. If you think about these large institutional investors, they've got a very large amount of money to deploy. So they will have a very large allocation to equities and bonds probably. Equities for sure. And so the hedge fund piece is a piece of the puzzle. It needs to behave in a way relative to these other big asset classes. And on that front, the opportunities that we see in the global geopolitical scenario at the moment are actually quite good. There's a bit of volatility in fixed income. There's, changes, structural shifts happening everywhere. But in terms of your question, different styles for different things. And I think that the common thread is this institutional investor wants that piece of the puzzle to have a certain decorrelation profile. That's what they want from you.
And Aaron, I want your take on a piece that was written by the Financial Times only a short time ago. It said in September that investors were turning sour on multi-manager funds. And this Financial Times piece cited Goldman Sachs research that said big firms had actually seen net client withdrawals for the first time since 2016. So what do you think that sentiment shift ultimately says about the industry today and the outlook for MMFs?
Well, there's definitely been a big regime shift over the last decade, and that's seen a lot of LP money moving steadily into the larger firms, particularly the firms that have multiple PMs, a so-called multi-PM model. That's been at the expense of smaller boutique hedge fund operations, and really some of the driving forces behind that have been the increased cost of running a small business, the increased regulatory burden, and the increased power of the larger firms to utilize their size to attract the best talent, to deploy economies of scale, and also to offer flexibility to LPs, particularly investors who need customized solutions for specific investment needs. You mentioned the article in the FT. I'm sure you're very aware that the press often exaggerates things.
No.
So I think that trend has been very powerful over the last decade. LPs, I think, are much more comfortable these days with investing in the larger companies, partly because of all those economies of scale factors that I mentioned, and also because the increased governance and better controls of larger institutional operations guard against unexpected behaviors from small boutique owners. And that trend is here to stay, and I think will remain there for a while.
And just quickly, highest, as you sit here almost mid-December, what's your highest conviction bet into 2025?
In terms of markets, we're looking very carefully, of course, at what the incoming US administration might do. It's clearly a very business-friendly administration, and particularly be interesting to see how far they go down the track of reducing the regulatory burden on crypto. I mentioned already that crypto is very important to us, and we have a huge crypto fund. That most likely will make the US economy remain strong. At the same time, deficits are high, so that pressure of strong US economy, high deficits, will likely make the dollar strong, or remain strong. and that will put pressure on other countries such as Japan, which had super low rates. Perhaps we'll finally see significant rate rises there, and also pressurize some of the emerging economies, particularly those that have dollar liabilities, such as Brazil, which has already been suffering some market disruption over the last year or so.
Lita, did you want to react and respond to that as well? My question was the highest conviction bet coming into 2025. Can you expand on what Aaron has just said?
Yeah, sure. The quant investor, tends to react to the data more as it comes. I think structurally, I completely agree with Aaron. There's an incoming US administration with a lot of very alarming views. I am quite alarmed by Europe, I have to say. We were just chatting about this in the green room. France trading, pretty much at the same level as Greece. So there are reasons to be worried. There are also reasons to be optimistic. The GLP drugs coming in, societal effects that are broad and wide-ranging. And of course, AI, which, is an enormous productivity tool. So in answer to your question, I think that there are reasons to be optimistic. I think equity valuations are high, but, human beings make progress, It's the nature of the game. So there are reasons to be optimistic. There are some geopolitical risks. There are some risks attached to the US administration and European risks as well. But, broadly, I think that's the way that I see it.
And just bring it back to the hedge fund conversation as well. Bill, does location make a difference to investment returns, or can you run a hedge fund from anywhere?
Well, I think when you look at what they've done here in Abu Dhabi is they recognize that the infrastructure that you need in order to be able to really, do high-frequency trading or be able to go into any kind of a structured product or derivative, you can't do it if you're going to try to do it on the cheap. And what you admire about what they've done here is they've invested in all of that infrastructure, and that makes everything work better, right? You get your first iPhone, it works okay, except you're at 2400 baud modem, so it's really slow, and you get frustrated. But as that improves, you get more confident, and people make bigger bets because they got bigger convictions. And I think having pools of capital as well, like they have here, you need liquidity, right? You need to be able to move in and move out without everybody going, there's Lita. You can't do that, right? You got to be able to get in and get out without really impacting what the valuation is, because of your trade.
And Lita mentioned something really interesting as well. Of course, it's on everyone's minds right now, and it's AI. I'm curious to get your take, Bill. Who in the future will be more equipped, more enabled, and perhaps better able to deliver a higher investment return? Will it be human beings or will it be technology?
Well, I think human beings are an essential part of all we do because we interact on an emotional level as well as an intellectual level. Technology is very powerful, and everybody is, AI. I'm, yeah, be careful, right? You get ahead of yourself, all of a sudden it's like, wow, I used to like crypto, except I don't know where it went, right? So you got to have the right rules, the right controls. You got to do some stuff that people don't like internal controls and separation of duties and reconciliations. And if you have any problem with those, we can help you.
As it stands today, would you let AI manage a large fund? Would you let AI manage a 401k, for example, as it stands right now?
No.
Why?
Because I don't think it is all vetted. So, you get what they call hallucinations. You get other things where it comes back and you read it and it sounds brilliant. And then you dig into it a little harder and it's like, well, they made this up and they made this up and they made this up. So you got to be careful, right? Intelligent people sometimes put on a facade, and so will artificial intelligence. So, I'm a big believer we spend a fortune on it, but at the same time, blindly letting them take over the investment decisions of my money or hopefully my clients' money is I think, ill-advised.
I think it's such an interesting conversation, and I'll get our other panelists to weigh in on it as well. But adding to that, what would you say is one big thing to watch that's going to shape the investment management space in the year ahead, and why? I might start with Aaron and then give Leda the final say. Aaron, what's your take as we wrap up?
I just want to go back to the point on AI. AI is obviously changing all of our lives very rapidly, and it's also changing the landscape for investment. In the world of Brevin Howard, we're using technology now to parse and filter and score the enormous volume of incoming data and research that we receive on a daily basis. We're using AI to assist portfolio managers with types of co-pilot to help them with the task of managing their money. I completely agree with Bill that it's a combination of the human and the machine that is the winning formula. The machines are brilliant at parsing, at identifying, and at analyzing, but they're not that good at predicting things that might change. And we saw even just this last weekend in this region, a change which people weren't expecting. These things happen all the time, and machines are not that good on those things. And that's where human is incredibly powerful. So the combination of human and machine, the machines are getting more powerful. It's obviously particularly important in the crypto space, where the whole industry is founded on technology. And anyone with a deep understanding of technology will win in the crypto space as long as we have a year like I anticipate next year, where it's not just all about Bitcoin. So technology is coming, it's transformational, and that's the thing that's really going to be different.
Bill?
Same question?
Yeah.
Well, I think the same. It is, you're a smart person. You can look at things. You can get information. You can collaborate. And I just think that it's not always, you have Formula One here and it's so exciting, but they got a brake on those cars too, not just a gas pedal. And understanding that you better be aware of both of those powers in order to navigate in a safe way. And that's what, these guys are fiduciaries. They have other people's money, and it's stuff they care about deeply. So I think that they're investing the time and effort to understand the capabilities, but also what some of the risks are.
And Leda, just finally, one thing to watch that will shape the investment management industry in the year ahead. What is it?
Well, beyond AI, because AI is really changing things. I could, if we had more time, I could take us through some examples, concrete examples. But I'm watching Europe with a somewhat fearful mindset. As we worry about China or the U.S. administration or whatever, I'm kind of watching Europe and a bit worried about that, to be honest. But as I say, still plenty to celebrate and be optimistic about.
Really fascinating conversation. I certainly enjoyed it. I hope you did as well. Ladies and gentlemen, please make my panel make my panel welcome. It is Leda, Bill, and Aaron. Thank you all. Appreciate it.
Thanks, Dan.